All right, guys, you're here because you want to know what these numbers mean. I know that it's really easy to get these financial reports and say, okay, well, that's great and all, but where did this come from? Sometimes I even hear where people are like, there's no way this is right. Can't be right. So how do you know when you receive financials if the numbers are right? So that's what you want to know. We're going to break these down into 15-minute segments. I know that the human brain can only take so much information, so we're going to break it down. And if it takes more than 15 or 5 weeks, I don't mind. We can do this more weeks. And that way, every Friday we're going to post a video. You can learn this information and then ask questions, and we can add it to our next video and keep going. So yeah, how do we know this day is even right? So on the left, we have a profit loss statement. On the right, we have a balance sheet. Yes, I'm using the desktop version of QuickBooks. As an accountant, I prefer it. But like I said, or I've always said, they all work the same. They just look a little bit different. So everything that's on the desktop version is in the QuickBooks Online, except for some accountant features, some fancy features that you wouldn't use anyway. The desktop version is a little bit more robust, but for everything you guys are using, QuickBooks Online has the same tools. So I'm just showing you because it's a little bit easier. Because I can, in the QuickBooks Online version, you can't compare two reports like this. So it's just easier for training. And also, if you're a HarQuin boutique bookkeeping client, you already have this access to this because you guys can have access to our cloud, which hosts the desktop version of QuickBooks on the internet. So yeah, so let's proceed. So yeah, so we have a profit loss and we have a balance sheet. I'll give you a general overview of what a P&L is. So P&L is income and expense. So up here we have your income accounts. Then we have your cost of goods sold. Cost of goods sold means things I had to buy in order to make money. So did you have to pay Shopify in order to use their service? Yes, cost of goods sold. So, and then purchase for resale. Obviously, you had to buy product in order to sell product. Down here at the bottom, you have your regular monthly expenses, regular business expenses. And at the bottom, obviously, we have our net income. Oops. Okay. So that's what P&L means. So it's income, and all intents and purposes, it's income minus expense equals net income. Okay. On this right side, this is called your balance sheet. It's going to have your assets, which are things you own. So that's right here. Your checking account, cash is stuff you own. Inventory is also stuff you own. Down here is liabilities, money that you owe to others. So this particular sample boutique, HarQuin's sample boutique, has a Shopify loan. It owes money to the state for sales tax, and it also owes customers money for gift cards. It also has credit card debt, and we're going to scroll down. And then equity is basically money. There's different types of equity. I'm not going to get too far into it, but members' drawn contributions is probably the one that it'll affect you the most. It's money that you have put in or taken out of the business, out of your personal account or to your personal account. So it's kind of like the owner's bank account, money going in or out through the owner's bank account, personal bank account. So that's what that is. The balance sheet, if you notice, only has an as of date. That is because it's like a bank account. You wouldn't call Chase and say, Chase, what is my account balance as of January 1st to January 31st? You would say, what is my balance as of January 31st? So that's why there's only an as of date here. Over here, what you say beginning date and an ending date. Because I want to know how much money I made between this day and this day. So I hope that logically makes sense to you. Okay, so let's dig into the P&L. Now that we know what the two different main reports are, let's dig into the P&L. So let's start. We're going to start with just income today. Where did these numbers come from? So it looks like I can just tell you off the rip that this boutique uses Shopify as its main platform. But if you go down here into fees, it It sells through booths and events. It sells through comments sold, which likely means that it has comments sold connected through Shopify. It uses PayPal as a checkout feature. It uses Sezzle as a checkout feature, and it also uses Shopify. So this is us recording the merchant account fees for each of those. Okay, so where does this number come from? Well, let's go ahead and open it up. It looks like this boutique got started early 2019 and then progressed. So let's go ahead and just open up December because that's the biggest month. All right, at the top we see gross sales for the month. By the way, side note, we use monthly entries. We do not believe in connecting your Shopify or any sales platform to your QuickBooks or QuickBooks Online. I've been a QuickBooks Advanced Pro Advisor as of right now for around 10 years. And the reason you don't want to do that is because, well, it can double count sales, but it can also double and triple download the same transactions over and over and over again. The problem with that is you'll overstate your income or your expense. It could go either way. So that is very problematic. We, in early 2019, actually inherited a client in her QuickBooks file that had 15,000 extra transactions downloaded through PayPal. So do not connect PayPal. Do not connect any sales platforms. The only thing I would feel comfortable anyone connecting is their checking account and credit card. As long as they vow to be very careful, because even that can be tricky. QuickBooks Online doesn't require you to put vendor names in, even though they're required. Like names, it doesn't require you to tell where the money's coming from. So say you go to Staples, you can just put office supplies and not say that you went to Staples. That doesn't seem super problematic, except for when you go to do your taxes, or if you're ever audited, it just says office supplies, $20. It doesn't say what vendor. And IRS agents do use QuickBooks files to conduct audits. And if you ever wanted me to hop in to see, hey, Lindsay, can you double check to make sure I did it right? There's no way I'm going to know. It just says $20. It could be Chipotle $20, and it is miscategorized. There's no way for me to know. So I just want to keep that on your front of your brain. Just because it does bookkeeping for you, it really doesn't do bookkeeping for you. The human brain still has to code the transactions and make sure the right data is getting in. So that is why you're here. You want to make sure the numbers are right, and how do you know if they're wrong? What to look for. So the process of entering sales, so all of that to say, the process for entering sales is we recommend you enter a one lump sum entry every month per sales platform. Like I said before, this boutique, an example, only has one platform. Technically has two, but one dumps all the data through the other. So we don't count comments sold separately because all the data is dumped into Shopify. So we have only one platform to record. Now, if they were separate, now some people have them separate, we would record 2 sales entries a month. One for comments sold, one for Shopify. Okay, so here's our entry. We ran a financial report into Shopify, and it gives us all this data. So the first line is gross sales. We actually make our entry look exactly like the report, so it's user-friendly. And we just go down the line. So sales, gross sales, less any discounts, less any returns. Shipping income, a lot of you have shipping income if you sell online at all. Any monies that you collect from your customers will be sitting there. The next line, sales tax collected, that will go into your sales tax liability account. So far, these first 3 lines are posting to the Shopify sales account. This line is posting to the shipping income line. This line is posting to the sales tax liability. A common mistake is some people will count the sales tax they collect from the state or from their customers as income and then actually pay income tax on that number. So that's not your money. So this $1,400 is not this boutique's money. It's the state's money that you've collected on their behalf. So we want to get that on the balance sheet as a liability right here. Right here. we want to post it there and not to sales. Okay. The next number, we just did a subtotal here because this matches the Shopify report. We just want to make sure on the right track. So this line tells us that you have sold, or this sample boutique has sold $700 in gift cards. Is this money earned yet? The answer is no. So by definition, it's a liability. And so that line is going to post here into the gift card liability. The good thing about selling gift cards, if no one ever redeems it, it's literally cash, tax-free cash. So keep that in mind. You might want to push your gift card sales more often. Okay, so the next line we have is, these are all negatives. Store credits used and gift cards used. We want, anytime someone redeems a gift card, we want to lower down the liability, and this is how it's done. Okay, so this line is for cash. And the reason why we have to separate cash is because most small business owners don't deposit all cash. I recommend you do. I really want you to, because when we see people get audited by the IRS, they chase the cash. I'm going to do a whole nother video on that later about depositing all cash. So we have to separate that out and say, okay, you collected X amount of dollars in cash. Sometimes you guys will pay people out of it. Sometimes you will, like right here, they paid a window washer out of that. So we have to account for it somewhere. So this is how we do it. Also, sometimes you will keep it and take it home. We also have to account for it that way. Basically, we would just write a check out of the bank account called cash DIT as members draw. So DIT just means deposit in transit, money collected but not deposited yet. So if you look right here, we have a deposit in transit. That's our regular deposit in transit. That's money earned but not deposited from Shopify, Comment Sold, PayPal, yada, yada, yada. So that's how we account for that, monies that haven't been received yet. That goes back into our big lump sum entry. You see it's being deposited to deposit in transit. So deposit in transit is going to get $19,000 worth of sales that we're expecting to receive. It looks like at the end of the year we received all of it but $1,800. So that's good. So that's sales that we made on December 30th or the 31st that did not hit the bank until January. This is how you properly account for sales in the right month, by doing this big lump sum entry. And I know this is tricky. So, and it's logical, but I also know that it might not be your cup of tea. The Lord has gifted us with different talents and data manufacturing, making everything balanced. Actually, my shirt says reconciled. We love, as accountants, everything to be reconciled, balanced, square, perfect. And this is our way of being able to doing the big lump sum entry every month and running all through deposits in transit, and then having the bank account pull money out of deposit in transit when it hits the bank. That's what you see here. Let's see, of December, for example. So this is our way of recording sales in the month that they were earned, which is what you want to do, especially if you have a big sale. Perfect example, Black Friday happens right at the end of the month. Sometimes it happens so close to the end of the month that you don't get to hit the deposit, don't hit until December. If you have a big sale day, the last day of the month, you want that to be recorded in the month it was earned, not the next month. So you don't want to record sales based off of deposits. Also, to refresh your memory, included in that deposit is also sales tax, not your money. You don't want to have that recorded as sales. Also, what's not included in that is the fees that Shopify and PayPal and Stripe and Sezzle, all of them, take out before. You're not recording that, and we'll go over that later on how to record those properly. Another thing that might not be included is if you have a Shopify capital loan or a PayPal capital loan, they're taking their money out to pay that loan back before it even hits your bank. So you don't want to go off of sales or deposits just for sales. So I hope I've convinced you to do it the right way by doing the once a month entry and using something like a deposits in transit. I know we all have our different skills. So if this is not making sense to you, what the next step would be is we can do one-on-one training. Like I said, I'm an advanced QuickBooks Pro advisor. I do QuickBooks training, QuickBooks Online training. We do like financial consulting. We have a CPA on our team that can do one-on-one customized consulting. It's extremely affordable. And you even get a discount if you're our client. Obviously, you can outsource your bookkeeping. A lot of our boutiques are small to mid-sized boutiques. Obviously, it depends on the amount of transactions you have, but most of them end around $150 or less per month. Some of them are only $55 per month. If you think about the cost of QuickBooks Online and the time it takes to do bookkeeping right, and what's at stake, all the potential, income tax that you may or may not be paying correctly, there's a lot at stake. If you balance all that out, it might make more sense to outsource your bookkeeping, or at least get the ball rolling. Maybe have us do a few months and then you take it over. Something to consider. If you haven't got an estimate from us, just go to our website, click the estimate button. We'll customize an estimate right for you, directly for you, and we can get the ball rolling. Your industry, if I can encourage you, that your industry is not easy bookkeeping wise. There's so many different variables that you deal with that a lot of people don't. A lot of businesses don't. So I think that's it. So tune in next week to get the next segment. We'll go over cost of goods sold and inventory on the P&L. And I look forward to talking to you guys. Reminder, if you have any questions at all on this one, leave them below and I will hit them up next week.